Welcome to Turning Hard Times into Good Times. I'm your host, Jay Taylor. I'm talking to you from New York City, actually Queens, the borough of Queens, and we're without power today. So I'm talking to you from my cell phone. It is the 4th day of August, 2020. And I do like to remind you that I'm the editor of a newsletter, Jay Taylor's Gold, Energy, and Tech Stocks. You can sign up for that by going to miningstocks.com. We like to also promote Chen Picks. Go to Chen Selling, go to chenpicks.com. And Michael Oliver is back with us today. It's olivermsa.com. Those are 3 sites you want to take down and consider subscribing to those letters. I do want to thank all of you for this show making the number 1 show, or at least one of the most popular shows on the Voice America Business Channel. And I want to encourage you to continue sending along any comments you might have, any comments you might have to questionsfortaylor@gmail.com. I do want to thank our sponsors for making this show economically viable. Our sponsors for today's show: Great Bear Resources, Benchmark Metals, NV Gold, Hannon Metals, Irving Resources, Lion One Metals, Novo Resources, and Sitka Gold Corp. Before I talk more about today's show, let me just say that Great Bear Resources just put out another phenomenal set of assays this morning that drove the stock up by more than $1. The headline assay for Great Bear was 81.22 grams of gold over 10.5 meters. Not only is this a remarkable intersection, but it occurs very near bedrock surface. It was drilled 140 meters in an area of 140 meters along the LP fault that had not been drilled before. Also, results continue to show great continuity of gold mineralization along strike and at depth. Now, one very well-regarded veteran mining analyst told me last week that Great Bear is greatly overvalued relative to another of my favorite stocks, that being a company that is not a sponsor of this show, but one that is covered in my newsletter. That company is Galway Metals, which was up more than 18% today earlier. At least I haven't checked it in a bit. But it was up on, again, this is a company that has an amazing gold discovery underway. But to sell Great Bear short at this juncture, even though we have done extremely well with this stock up to now, I believe would be a huge mistake, because we just don't know the limits of this deposit, and every time this company comes out with more drill results, they're just amazingly good. So I'll be talking much more about both of those companies in my newsletter in more detail this coming weekend. So again, you might want to consider subscribing to Jay Taylor's Gold, Energy, Tech Stocks. Go to miningstocks.com. I also want to tell you that I have now completed the content of a course on investing in gold. The title of the course will be The Basics of Investing in Gold and Silver and the Miners. The first lesson will be setting the table for a once-in-a-lifetime gold and silver bull market, which is what I think we're in right now. The second lesson will be investing in post-COVID-19 world, a fourth turning demise for America and the U.S. dollar. The third lesson will be different ways to own and invest in gold and silver. And the fourth lesson will be the basics of investing in gold and silver mining stocks, especially with an emphasis on the exploration stocks, which is what I cover. And then lastly, the fifth lesson will be guidance from 2 professionals. Dr. Quentin Henning and Chen Lin will be with me in that one, and we'll do a video on that as well. Dr. Quentin Henning, who is perhaps one of the most, if not the most sought-after gold exploration geologists on Earth, will talk about what he looks for before devoting his time and intellect to a mining project. And Chen Lin, who has had a remarkable track record of investing not only in mining stocks but in energy and biotechs, will also be with me in lesson 5 to talk about trading strategies that he has used so successfully for him and his clients. Now that I have gathered the content, I need to film these various 6 lessons, which I will do as soon as I am able. We still need to decide on a price for the course, which will depend in part on the level of interest. If we have heard from it, we have, in fact, heard from a number of you. So if you're interested, please register your interest by going to questionsfortaylor@gmail.com. And if you register your interest there, then we will praise you of more details, including the price of the course, once we are ready to run with it. And I think we do want to move as quickly because, as I'm sure all of you are aware, gold and silver are really starting to march to much higher levels. Turning to today's show, my guest today, Michael Oliver, is back with us. Thank God for that. And Dr. Quentin Henning as well, and Dan Oliver will be with me as well in the second half of the show today. I've titled today's show The Slingshot. Now, that title was taken from an article written by Dan Oliver, who will be with me, as I said, during the second half of today's show. His article refers to the dramatic and exponential rise in the nominal price of gold and silver that is starting to take place as the Federal Reserve has no politically acceptable choice but to hyperinflate our currency. In other words, to destroy the purchasing power of the dollar, which can only be seen as another fraudulent currency that is slated for the dustbin of history, as all fake, fraudulent fiat money systems have been in the past. The only enduring money on earth is gold and, to a lesser degree, silver. And most of the founding fathers in America understood the need for honest money if America was to remain free, because once money is in the hands of the politicians and the bankers, it is used to redistribute wealth towards their own selfish ends. That's why our founding fathers defined the dollar in terms of a set amount of gold and silver. But alas, the sinful nature of human beings tempts us to think that we can have something for nothing. And so Richard Nixon and the entire Western world, they bought into this big Keynesian lie that you can print your way to prosperity by providing currency that enables you to buy more than you produce. So yes, the Fed can print, but that doesn't provide supplies for consumption. And with massive unemployment now in America, thanks greatly to an overreaction, in my view, to COVID-19, Humpty Dumpty is set for a very big fall, and it won't be easy to put Humpty Dumpty back together again, I'm afraid, given the ignorance and misguided anger towards capitalism that we're seeing displayed by groups like Black Lives Matter and Antifa and many others. So in the second half of today's show, Dan will talk about the great slingshot in the price of gold and silver as a growing number of citizens around the world are waking up to the big lies told by a self-serving deep state. The problem for them is that there are physical limits within the four dimensions of time and space, even if they think they are gods that can defy them. We are all about to find out that the men and women at the Fed and in the Supreme Court and in our government are mere mortals whose hubris has led them and our country down a path to destruction. Well, whatever God permits to take place in America, we need to do our best to love and provide for those around us, starting with our own families. And so I'm very happy that Dr. Quinton Henning will be with us in the second segment of today's show, because as much as anyone I know, he has been enabling shareholders of various companies, starting with Noble Resources and Oakland Resources, to build wealth in the midst of the carnage that is taking place thanks to an increasingly belligerent American people and our totalitarian government. Now, I am super happy to tell you, however, we don't have to wait long, because right now and right here, Michael Oliver is with me to give us his latest take on these very, very unusual markets. Thanks for joining me, Michael, and we've really missed you, I can tell you that.
Hi, Jay. Good to be back. Yeah.
Good to have you, and I understand that you've relocated to another state out in the western, out somewhere around the Rocky Mountains. So
yep,
I hope you're settling in. And
we look at them. We look at them in one direction. The other direction is flatland, so it's kind of two-dimensional. Anyway.
Well, that's nice. That's nice. Well, let's start with gold and silver. That's the obvious one. What's your take here? Now, Michael, I'm always worried, from past experiences, I know when the gold market starts to go up, I get really excited and I keep buying junior gold stocks, and I buy them and buy them and buy them, and then smack, there's a crash, and I've lost 70 or 80% of the value of those little junior gold stocks. Are we anywhere near that point in time?
I don't think so. I think we're near the opposite of that. I think the tone that the market, especially the miners, over the last 5 or 6 years has taught people, investors in that arena, to be nervous Snellies all the time. I think the opposite emotion is now justified, and it's rationally justified, because I think the technicals are totally unleashed. Silver has demonstrated that. Silver was a dog compared to gold over the last 5-6 years, and it got flushed in March along with GDX, and immediately reversed after the bear trap was sprung. And we had to buy. Of course, we like silver down in there anyway. But once it crossed 1948 last month, $19.48 on the July contract, which has since expired, we had an annual momentum breakout that said silver is now going to go vertical rapidly. We thought the first surge would at least take it to 25. It took it up to about 26, and we had a rapid sell-off, a buck or two, which we expected some turbulence once we got up above 25. But now we're back up 26 again, which says the turbulence we just had there, you could have missed it had you gone fishing for a day. Okay, so that's the kind of break you should expect from now, and not multi-month breaks and things of that sort. Very brief, short stabs, and if you try to exit, take profits, and you take your eyes off the screen the next day, you may miss getting back in. And so we argue repeatedly of late that quit thinking that way. We're in a major crisis. We're in a major bull market in silver and gold that is historic. None of the others prior to this were facing the same kind of macro technical and macro fundamental events in the world. This we think is the final move of gold, meaning that once gold moves up here this time, it will be opposite effects will be occurring in other asset categories. I'd call this the giant swirly of history. I think the emergence towards state socialism in the West, the gradual, loving, Fabian-type socialism as opposed to the jackboot type, has been growing for 50 years. And it didn't matter which political party was in charge. The growth of government, its intrusion, its overriding of free exchange between people has created distortions, errors in investments, and in all kinds of arenas. And when that comes unraveled, all of these accidents and errors and pricing and so forth will reveal themselves with much pain. But then again, pain sometimes is needed to heal. And I think gold is expressing that. Silver is now expressing it. The T-bonds are expressing that, though at some point in the near future they will probably go the other way, meaning higher rates. But right now they're still a safe haven. The dollar has now caved. We had a number for last month that it closed well below, turning its annual momentum back into negative. We think that's now wind at the back of gold. We'd also watch the U.S. stock market and the developed stock markets because that's an asset category that's likely to suffer greatly. Now, I know everybody thinks, well, the Fed has our back, the ECB has our back, the BOJ has our back, it can't go down. Well, don't bet on it. And also, even if they succeeded, and in some manner these indices, the DAX index, the Nikkei 225, the New York Composite, which looks totally different from the S&P 500 and from the NASDAQ 100, by the way. If they manage to actually continue to rise, they would be beat vastly in performance by gold. So it doesn't matter if they continue to rise. They're not a good place to be. We suspect they're going to roll over because we think that the three stocks we're watching most closely on the NASDAQ 100, which is Microsoft, Apple, and Amazon, we think those blow-off situations, and we think that's what they're doing now, vertical blow-offs, which is usually the emotional tantrum at the end of a bull market. When they turn over, the leadership will fail. And also we're watching the other end of the spectrum, which people don't seem to be watching much, and that's the banks.
Yeah.
Banks in the financial sectors are behaving very poorly. Even on just price charts, they look like they're in a different world than the S&P, which is heavily weighted by those three stocks I just mentioned. And there's a different vista of reality there. Also, the banks in Europe now are at price levels that are below the 2009 bear market lows. So don't be surprised by some overnight event among some of the big banks in Europe. So we're monitoring the banks because we think that's where the ambush headline might come from. Again, everybody's looking at Apple, Amazon, and Microsoft. They should not be. But anyway, we think all these events are linked together. We also think the commodity complex is now beginning to assert itself strongly. Bloomberg Commodity Index, for example, right now is just above 70. We think if it gets to 73, the lid's going to come off, meaning that is a weakened, a very cheap asset category will be a favored category going forward. It's likely to go upside in a rapid pace because it's so cheap, it's sold out, and money is obviously flowing into that arena. And I don't just mean gold and silver, but in things like copper. A lot of base metals in the Chinese exchanges are going vertical. We think soybeans are about to go vertical. There's a lot of stuff out there that is linked together, and we think that now we're back in the late 1970s again. Gold and silver lead the way, and commodities follow, and stocks are a wasteland. So anyway, it's a different time and a different place, and you have to think differently, I think.
Yeah, I think you're right. I mean, you can't just think in a linear fashion your whole life. Sometimes things go exponential, and it certainly seems what's happening right now. And I might say that your views on the banks are right in sync with Alistair McLeod as well, who has been warning that the banks, not only the banks, but he thinks the dollar is in for some huge trouble before the end of this year. Michael, I want to thank you so much for being back with us. Your ideas are just really, your views are just so much beloved in this space. I want to thank you so much for being back with us again, and we'll look forward to talking to you in a couple of weeks from now.
Thank you, Jay.